Since you've done all this research, what did you learn?
Well, good morning, Eric. Well, basically, the global airline industry and the U.S. airline industry in particular is going gangbusters at the moment. And as you said in the lead-in, yes, stocks are off over the last 3 months or so, but I think you've got to put that in perspective. If you look at someone like a Delta's market cap 3 years ago was about $8 billion. They crested at about $40 billion a couple of months ago, and they're sitting at about $35 billion now. So yes, whilst they've come off a little bit from the high, they've certainly had a massive run-up over the last 3 years.
Is the fate of the airline industry, from a profitability standpoint, really just a matter of oil prices right now?
No, Eric. I mean, we've seen some fundamental shifts in the industry over the last basically the last 5 years, and it all started with the oil spike back in 2007. So, if I focus on the U.S. industry, we've had lots of restructuring in the U.S. industry, a lot of consolidation that's taken excess capacity out of the industry. But what's really underpinning the profitability of the U.S. industry is ancillary revenues. Yes, I hate to say it, those bag fees, those pesky bag fees that everyone hates. They're actually underpinning the profitability of the industry. If I look at the performance of the top three players in the U.S. industry over the last 5 years, so Delta, American, United, they generated returns in excess of their cost of capital of about $23 billion in aggregate over those last 5 years. But within that $23 billion, they actually earned, or actually over that same period, that same 5-year period, they actually earned $37 billion of ancillary revenues. So you do the math. If you take ancillary revenue out, they certainly wouldn't be as profitable as they are today.
So is the answer to the success or the turnaround of the industry just don't offer customer service?
Well, Stephanie, we actually think that the U.S. industry now, because it's in a financially stable position, is in a much better position now to offer better customer service. And you see some of the initiatives like people like Delta are doing. I mean, it's fascinating. If you go back 10 years ago, you would have thought the U.S. industry could never be competitive in the premium classes.
I want to interrupt you because we need to run shortly, and I need to ask you a question about pricing. If you look at the pricing data, it suggests that the airlines have had quite a bit of pricing power, but it's beginning to tick down. Are they losing? I'm looking at a chart of domestic average airline fares in America. It started to tick down. Are they losing that pricing power?
There's plenty of competition in the market. Well, again, I don't think pricing power is the appropriate way to think about it. People talk about price wars, but again, I get back to the ancillary revenue thing. Back in 2007, the average ticket price, round fare ticket price, was $300. Today it's $400, of which $25 is ancillaries. I mean, if there's a price war, the $375 ticket price may go down, go up, but the $25 of ancillaries will certainly still be there to underpin the profitability.